No repo rate cut, no easing of reserve requirements, just a tough talk by Governor Rajan is all it took for bankers to drop their guard. India's top three banks, SBI, ICICI Bank and HDFC Bank, cut interest rates within hours of the governor asking banks and taking them to task for not passing on the rate cut benefits to their customers. Not just that, in its monetary policy for the current fiscal, the RBI also changed the rules of the game, linking base rate to banks' marginal cost of funds.
On his part, Raghuram Rajan said he will keep a close watch on the pace of transmission and consumer price inflation before dropping the guard any further. The RBI has revised the growth target for the year upwards to 7.8%, provided the government stays firm on the reform track. But more than anything else, today's monetary policy is all about Rajan getting banks to cut interest rates with just a tough task. And that is a top story under this tonight.
Raghuram Rajan means business. He didn't cut interest rates, neither did he ease liquidity measures while unveiling the monetary policy for the current fiscal, but got banks dancing to his tunes. The message was loud and clear.
The base rate doesn't seem to stand in the way of banks raising the base rate when interest rates are raised. It only seems to come in the way when interest rates are cut.
To make sure that the message is not lost, the RBI today changed how lenders calculate their base rate. Earlier, banks used to calculate base rate on average cost of deposit basis. Now, banks will have to calculate the base rate taking into account marginal cost of funds. And banks are falling in line, although reluctantly. SBI was the first off the block, cutting lending rates by 15 basis points, followed by HDFC Bank and ICICI Bank, which reduced both lending and deposit rates. The RBI governor made it clear that the central bank will keenly watch price movements, especially food prices, before easing the rates further. The monetary policy says consumer inflation could moderate to around 4% by August, but could again spike to 5.8% by the end of the year, calling for a concerted action by the government to ease supply bottlenecks.
The 4% in August goes, that's largely because of base effects. And when we say we're looking through base effects and seasonal effects, it means two things. One, the seasonal price rise as a result of vegetable prices, as well as perhaps because of weather disturbances, is something we can look through. So we're looking through the ups as well as the downs to try and see whether the incremental inflation is down to a level where we have the ability to accommodate.
The RBI says growth will pick up this fiscal to around 7.8% thanks to revival on the ground. And for this, the government will need to stick to its reform path, and a rate cut down the line will only provide the right momentum. Is Jaitley listening? Gopika Gopakumar, ET Now, Mumbai.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.